Thursday and Friday. Where is it? Thursday and Friday. So October 5th and October 6th. I did just rewind price to just before New York Open on Thursday. I will be covering the long I took in this session, and then I'll be covering the long I took on NFP Friday after the news release happened. Just covering higher time frame, all the good stuff. So I think we've already talked about it, but I did add this indicator to my chart indicating weekly opens, closes, and then if you go into the minutes, you have all of the daily closes and opens, right? So 5 o'clock, which is my time, Eastern, 5 o'clock. So this indicates what the price action we got on Wednesday, and then Thursday, et cetera, et cetera. But yeah, so we can start off here on the 15-minute. Actually, we'll go to the hourly quick. Okay, so last week we had a nice run of this high to the upside, inducing buyers into the market, grabbing all that liquidity here, and then breaking down, pullback, and then continuation to the downside, finally trapping all the buyers at the lows. Now, right away, I had my eyes on this high as a future higher time frame target to be holding positions into. So I had this marked out. You can also see we are building liquidity in these areas over here. So we have a nice 1 hour imbalance right here. So also mark this out. Okay, so now that we have these two areas marked out, you can see we're moving bullish. Okay, now we'll hop into the 15-minute and break down the more intraday price action we got here. Cool. So Wednesday, sweeping this liquidity, okay, to the left. And then we have a move to the upside, respecting the highs. Okay, why do we respect the highs? Because we took the low. So sellers are going to get trapped up here. We get false reaction down, up, and now this is late New York, so we kind of consolidate the rest of the day. Then the following day opens up. Asia comes back up to the highs. Look how we're still respecting the highs, building lots of liquidity. All right. Cool. So now how can we get involved in this? Well, right away, what do I see? To the downside, if we want to be taking a buy position, that's our bias right now. So if we want to be taking a buy, we do want to see liquidity taken to the downside. So you can see how through London, we had a sell-off, taking Asia low, okay, and then we moved bullish away. But we didn't take this liquidity here, right? Why do I mark this low? Well, you can see, if we look at this structurally, we have a high to low to high. So now on the pullback down, buyers are buying right here, anywhere above this low essentially, right? So grabbing this low here would be a nice clear on liquidity, especially now that we've respected it, right? This whole area here, we can mark this as like a buildup. Okay, so we're building all that liquidity. So it'd be nice to see price come down, take out that low. And then, yeah, we'll look for entries from there, right? So now, again, look how Asia's respected this high, engineered all this liquidity here for us. So we can actually, I'll even write this out that this is going to be engineered liquidity, and we can buy into it, all right? Okay, so we take out Asia high, but look what we do. We still stay above previous daily high. Or sorry, we still stay below previous daily high, which New York printed, okay? Still building a bunch of liquidity to the upside. We sell off. Now we stop below that low we had marked out here, okay? And look at the reaction we get right away. Okay, unfortunately, if you would have taken an extreme entry, what I was personally waiting for was this down here. So why am I looking for that? Well, you can see how we've swept this liquidity from these lows here, okay, giving us that liquidity block. Then we came up, printed this high, printed this low, and then ran off. So now we have inducement low here. So would have wanted to buy anywhere below 104,996, but unfortunately, if you were looking for that extreme entry, it did not come, right? We just missed it by, honestly, like so small, like half a pip, not even. So no extreme entry. If you wanted to take it like that from something from the left, that would have been it. But then, like I said, of course, we did not make it there. So look how we have that nice reaction to the upside. All right, leaving us a nice M5 liquidity block. I want you guys to think about this from a retail perspective too. Okay, from this high, big sell-off, taking out lows. What does this now tell us? All these areas up here are going to be a trap. Okay, this is retail wanting to buy the shit out of this now, or sorry, sell the shit out of this, but not understanding the overall direction. Okay, so these areas are going to be traps. We're not interested in selling this. We've now trapped buyers. Okay, and again, look at this from like a structure perspective. From this low to this high, we come down and take this low out. They see this, what is BOS, right, to the downside, break structure to the downside. Now we want to buy and target the shit out of this high here, Wednesday's high. Okay, which is also known as previous daily high. So we can mark that out. So first entry goes right here. Stop loss to the low is 6.8, so we'll go 7.5. And target. You have previous daily high as a target, and then we also have the area to the left that we had marked out to from the higher time frames, from that hourly time frame. So there is our target. Okay, now also, sorry, before we even play this even further, I want to mention the time. This is New York Open, right? So look how right at New York Open, we trap sellers here, okay? What this also does is any breakout traders grabs that liquidity, activates those buy stops, and then runs the other way, right at New York Open, okay? Then 40 minutes later, we take the lows and get a reaction up. We get tagged in our buys here. Okay, so timing-wise, we still haven't met 9 o'clock, aka like that trap hour where New York Stock Exchange opens up at 9:30. So when I took this trade, I actually mentioned in the Discord that I set alerts at this previous daily high for us to for me to take my profits and stuff, or just get hop back on the computer. Why? It's because since it's 9 o'clock, what can happen is now we can consolidate for like at least an hour, right? We still have that 9 o'clock timing influence that like some sort of move can happen. So for example, we can run up, maybe have false reactions here, even have a pullback, and then maybe continue up because of that time, right? That timing was that confluence. We still had a lot more time left in New York session, right? So I set an alert at previous daily high, and that's it. You let the trade do its thing. So like we can actually see we false reactions at the high, inducing sellers. And here, what time is it? Still 9:30, so trap hour. Look how we've built, look at the liquidity that's being built to the upside now. Like this is just screaming longs, longs, longs. Don't be afraid when we get false reactions like this. Remember that the market does not work like this. We don't just respect highs and sell off. This is just inducing traders, playing with your emotions. That's all it's doing. You have to stay numb in times like this. And then we tag this high here, which could be a partial if you want. And then we still build. Look at the liquidity we're building, and I believe there is your second target there. Okay, so now with the knowledge of we just took this high, anything that respected this high, aka this low here, is now known as inducement low. So what does that tell me? You want to partial heavily, at least like 75%, 80% here, because of the following day, which is also known as NFP, we can come down and spike through all this price action, right? It's definitely possible. Let me get rid of all these drawings so we can go into the following day. Leave our buy position we took here. Like that. Okay, so there's that one buy, and this is on Thursday. Now we'll go on to Friday and discuss further price action here. I need to go on the 15-minute, make this a little quicker. Oh, Jesus. Does that mean to do that? Okay, sorry about that. All right, so now Friday, NFP. Look at this from the higher time, like a bigger scale. We'll go to 15, actually see a little clearly. Okay, so we have this high we're interested in. right? Again, why do I like this high? Well, we sold off. Sellers are going to be interested in selling anywhere below this, okay? As we know, sometimes we respect areas like this, especially because it's a liquidity block, to build liquidity, okay? In times like this, does it make sense to respect it? It definitely does, because look at the liquidity we're leaving to the downside now, right? We just took out this high here, which induces buyers. So we're going to have even more liquidity tucked below this low now, okay? Not only that, but look at all the liquidity left the day before here, right? All those equals. And on a structure perspective, we have from this high to this low, and ever since we've moved away from this low, okay, this is where structure traders will be buying from, right? So now we even have this low as an area we can stab through as well. And also, I can honestly just mark it like this. This is previous daily low, right? Previous daily low. Perfect. So hop on. So okay. So something I want to point out as well is we are bullish on the higher time frames, but since NFP is coming up at, let me mark on the time, 8:30 here. Like we said, look at all the liquidity we have to the downside. What can happen in times like this is I actually had a partial still running for my position on Thursday. What can happen is either we at the open of or sorry at the announcement of news, we can spike up further, grab this liquidity, and then sell off, and then maybe have a move like this to the upside, and then continue up, or we respect the highs here, okay, we get a false move to the downside, maybe induce buyers, come down, and then maybe run up like that, right? So there's two different things that can happen. That's why I like to hold my position like this. We don't always know when the market has sufficient liquidity to the upside. So um, in times like this, we're bullish. You don't want to be selling. Like I said, a sell can occur. Um, it's just more difficult to cast those positions and less probable. So in this market right now, the high probable trade is buys. The less probable trade is sells. Okay, so if you want to buy, you have to simply just wait for these areas to get ran, um, and you don't want to be selling. And if you do, you have to understand that you're essentially trading with the engineered liquidity, so it's going to be less probable of playing out. But just for the sake of this video, I will go break down the entry we had on Euro for NFP. So we take out this high here. We can see, what did Asia do? Well, Asia, move this over. Asia sold off, okay? And then we came back to the upside. After taking out this high, what does this do? It induces buyers. So buyers are going to be interested in buying the market now at this area here, okay? So this is, again, another confluence as to lots of liquidity tucked below this low. Continue on with price action here. Now, getting more zoomed in, price took this low, okay, which induces early sellers into the market. This is going to be a trap. Look how we've now came up, took that high out, trapped those sellers. Now keep an eye on this time, 8:30, right? Price is just waiting for that time now. We get a reaction to the downside, hop on the 1 minute, let's see what we can see here. Okay, so we have okay, so on the 1 minute, look how we're now trading above that trap here. We come up, take out this high here, leaving us a liquidity block at the highs. Price comes down, sweeps this internal point, giving us another liquidity block, mitigating this one on the lower time frames. You wouldn't be able to see on M1. This is probably imbalances on the 30-second. There's just no need to go on the 30-second, so don't worry about that. But now we have another liquidity block here. Again, the logic behind the liquidity block essentially means there's no liquidity above this high, so why do we need to run it, right? 8:30 is coming, and look how we tap nicely into that liquidity block. Reaction to the downside, and boom, sell off. Okay, now where do we sell off to? Well, first we come to the low here. Structurally speaking, this is where buyers will be buying from. Trap those guys. Perfect. Hop into the 5-minute. Now previous daily low is coming up here. Look how we respect it for a bit, induce buyers. Okay. Now what we can look at this as a buildup. We sell off even further, taking out this low. Now trading within these areas here. And finally, we take out that low, trapping those buyers, right? Again, from this low to this high, people buying here, here, maybe somewhere in here, whatever it is. Lots of liquidity going to be tucked down below here. Okay, and that's exactly what we do. We hunt right for that low. And I'm pretty sure for an extra confluence, look how we have that imbalance right there. Okay, so remember, we're bullish on the higher time frames, overall direction. We just took a previous daily low. So what does that now tell me? We should run and take this high out now. Okay, so this whole move from A to B is false. Okay, and it's going to just induce sellers into the market. All these areas here are going to be traps. Okay, so how can we take an entry? Well, let's hop down to the 5-minute and see what's going on. We have a nice build up here, inducement high left here. Perfect. So no entry yet. Let's keep an eye on what happens. Okay, so this is what I was watching in live time. I saw that we spiked below this low and then came back to the upside, which now tells me we have a possible liquidity block, but we never got that closure yet. Now this candle comes in, we get that closure. Here is a liquidity block entry right off the tip of this candle with our stop below this low here, 104.88. Okay, 104.88 will go to 104.875. Perfect. And look how we identified this as an inducement high, so you can expect price to run up, false reaction, possibly tap us in, and boom. Okay, this is going to be a trap, this area here. Next candle comes in, tags us in, cool, right at the 5-minute liquidity block. And we are targeting this high, but not only this high, don't forget about our higher time frame area, this high up here. Okay, and I actually held full position here to this high. Super confident in this trade. Nice reaction to the upside. Take the high. Okay, gives us a pullback. Respects the high for a bit here. False reaction and another move to the upside. Look how we just attack those highs viciously, right? Beautiful move, taking out the news high, well, a pre-news high in New York. And also, you hop onto the hourly, it'll show you a little bit easier, but printing us our high of the week, right? Because Monday had the high of the week at first, and now Friday came in, took that Monday high out, and printed us our high of the week. So now market closes here. Actually, I'm pretty sure we can just, that doesn't show it yet. But yeah, New York ended up, and Friday, New York ended up printing us our high of the week, taking out Monday, which had the high of the week. So now we have this range of price action here. Low of the week and high of the week. Okay, so now what can I expect? Well, we still have this high here we haven't taken out yet, so maybe we can get a pullback now, and then a continuation up, taking out this high possibly. Or since we built liquidity at this high, maybe we start breaking down on Monday. So we'll see what happens. Now we have liquidity at the lows, which I do want taken out. So a couple different situations, but overall, I do want to see price to the downside. Whether we take out this high or leave it for the future, I'm not too sure. But yeah, we'll see what next week brings us. But yeah, hope you guys enjoyed this study, and I will see you guys in the next